So there's been a lot of talk lately about the possible audit on Fort Knox by Trump and Elon, and a lot of speculation as to whether or not gold is actually still at Fort Knox. Now, in today's video, we are not going to talk about that. We are instead going to assume that the gold is actually there. And if so, what does it even matter? What does it mean? I mean, right now, all of the US's gold is valued at $42.22 per ounce. And that's all of it, by the way, not just the gold at Fort Knox, but all of the US's gold that is held by the Treasury is valued at $42.22 an ounce. Whether it's in Fort Knox, West Point, or in Denver, it doesn't matter. That's where it is. So what would it actually matter, or what would it mean if Trump were to find that the gold's there? And what would happen if they revalued the gold to today's spot price of almost $2,900 per ounce? Well, in today's video, we're going to talk about all of that and my thoughts on what could happen. But do me a favor before we do, go down below and make sure you are subscribed and help us continue to grow. We're almost at 250,000 subscribers, and I'd love for you to be one of them. For the 5th year in a row, SD Bullion has given away a full monster box of 1-ounce silver coins. This year, they're doing another box of 1-ounce silver Tree of Lives, but this time, of course, it's for the 2025s. Now, as always, you have a full year to enter, but I suggest that you do it now by going to the link below so you don't forget. Thank you to SD Bullion for sponsoring my channel. So before I give you my opinion about what might happen if we revalue the gold, we should first take a look at a couple of facts. And the first fact we're going to look at comes right here from the US's own Department of Treasury website. This is from fiscal.treasury.gov. And this is a status report of US government gold reserve. Now, we're not going to read every line here, but this paragraph right here is exactly what I'm talking about. So it states, the book value of gold is currently $42.22 per troy ounce. The information used to compile this reporting is received from the U.S. Mint, Federal Reserve Banks, and the Bureau of Fiscal Service. So ignoring that last sentence, this is the important part. The book value of the gold that we currently hold. And again, like I said earlier, this is all of the U.S.'s gold that the Treasury currently holds. Denver, Fort Knox, West Point, it doesn't matter. $42.22 per ounce. Now, the next thing I want to take a look at here, and this is again just a fact, is the US's current national debt. So take a look at this. We are currently 36.5. I shouldn't giggle when I say this number, but it's such an astronomical number that it's hard not to just look at it as, you know, comical, because it's unfortunate that it's comical, but you get what I mean. But we are currently 36.54, basically 55 if you round up, 36.55 trillion with a T dollars in debt. This means that every single citizen, this includes babies being born today, starts their life off $107,362 in debt. And every taxpayer, these are people that are working and paying taxes, $323,000 per taxpayer. Now, if you're anything like me, $323,000, or even for non-taxpayers, if you look at every citizen, over $100,000 per person, not happening. I would imagine that 100% of the people that watch my channel cannot afford that. And I would bet that over 99% of the people in the US, or at least 99% of the people in the US, cannot afford to pay their $323,000 per share per person tax debt. But that's where we are in the US. And revaluing the gold that is sitting in Fort Knox and in West Point and in Denver probably isn't going to make that much of a difference. But let's take a look and do the math. And to do the math, we could go to the federal website and find out exactly how many taxpayers we're talking about here, where the debt clock is getting its data. But let's just have some fun and do it this way. So we have 36 trillion. We're going to grab our calculator here. We have 36,549,807,450,000, and that number is going to go up. You know, it's already at 600,000. Look how fast this is going. By the time I type that in, it's already up to 800,000. We're about to cross another million. But let's go ahead and take that and divide it by 323,047. So we are talking about 113.14 million American taxpayers, okay? So that is how many taxpayers we are doing the math on right here for the debt clock. Now, according to this article right here, and we'll read a little bit from this, it says, despite gold's market price hovering at around $2,900 per ounce, the U.S. Treasury continues to value its gold reserves at $42.22. We already talked about this. It says that the United States officially holds 261.5 million troy ounces of gold stored across Fort Knox, West Point, and the Denver Mint. At the current 42.22 valuation, the Treasury reports its gold holdings at approximately $11.04 billion. However, if adjusted to today's market value, that total would skyrocket to nearly $758 billion. So we are adding $747 billion to the balance sheet of the Treasury. How much does that $758 billion or $747 billion difference, how much does it even matter to the average taxpayer? So to do the math, we're going to go ahead and subtract that difference, that $747 billion from our current debt, and find out how much it would actually affect the taxpayer. So let's go ahead with our comical numbers once again. 36,549,820,400,000. I had to pick a spot. It's 500. You get the idea. All right. So there's our debt-ish. Let's go ahead and subtract our $747 billion. So 747 with 9 zeros. $747 billion from the debt. You can see we are still almost $36 trillion in debt. If we divide that by the number of taxpayers that we had earlier, which is 113,140,835, every American taxpayer is still in debt $316,000. Subtract that from our 323,047 that's currently showing, and that is a difference of $6,600 per taxpayer. Again, we are still in debt. We are still in debt, $316,000 per person. So clearly, revaluing the value of our gold and then attaching it to our national debt or subtracting it from our national debt isn't going to make a difference whatsoever. And that article that we were looking at earlier actually says the same thing. So it says, the reason for keeping the gold price at $42.22 stems from the abandonment of the Bretton Woods system in '71, when President Nixon severed the dollar's convertibility to gold. The official valuation was never updated. Some argue that this is deliberate to prevent gold from playing a larger role in backing the U.S. monetary system. So what are they saying here? Are they saying that if we continue to revalue our gold, people would push even harder for a gold-backed currency? Well, I don't think we have enough gold to cover our current debt to make a gold-backed currency unless it was a totally new currency, right? But it says, even though this artificially low valuation downplays gold's real value, it has little practical impact on federal finances. As we just showed you, the government operates on a fiat currency system, and the gold reserves are more of a symbolic asset than an active financial tool. So the next thing I want to do is take a look at this article here, and it says, what would happen if gold was revalued to $2,900? Now we're going to ignore the first two paragraphs right here because we've already talked about it, but right here it says, the revaluation might boost confidence in U.S. reserves and lead to discussions about returning to a gold-backed currency. However, modern monetary policy relies on fiat currency expansion, and the government is unlikely to shift away from this system. Well, what exactly does it mean by expansion? Well, it basically means that the government needs to be able to retain the ability to create money out of thin air. In other words, they need to be able to print more money at will for whatever it may be. And unfortunately, that is not really good for me and you. It's not good for the taxpayer. It's not good for the average American, because that is what creates a rapid inflation increase. And this can be seen more recently, but first I want to have you think about this for a second. Think about 1970. And I wasn't around in 1970, but you know, I've read plenty of articles about what life was back then versus what it was today. And, you know, assuming that the articles that I read are accurate, you guys can feel free to leave a comment down below and tell me if I'm wrong. But in 1970, you know, a man and a wife could have a couple of kids. They could own a home. They could have a car, all on one income. The husband would go to work. The wife would stay home and take care of the house, take care of the kids, and whatever it may be. Now we fast forward to 2025, and we are facing an unaffordability crisis like nothing we've ever seen. The average American can no longer do that. The average American cannot own a home and have kids and not have at least two incomes. The majority of American families have two incomes. The husband and the wife are working, and the kids are being raised by video games and television at this point. And this most recently, by the way, can be seen as recently as 2020. Think about COVID-19. Think about the lockdowns. Well, in 2020, when everything started getting locked down, the government started issuing checks so that people could afford to live because they couldn't go to work. They started issuing forgivable business loans to businesses. Forgivable as in you don't have to pay it back, assuming that they meet certain criteria, which a lot of them did. I know there's a lot of fraud there, but my point is that they started issuing these forgivable loans to businesses. They started issuing these checks to Americans. And where did all that money come from? Well, the government created it out of thin air. And then we saw what happened. Well, we saw inflation go up, right? We saw, well, first off, think about this. We had a lot of people that didn't want to go back to work because they were getting all this money from unemployment because unemployment benefits were higher. They got these checks issued to them from the government. And they didn't want to go back to work. And businesses were reopening and they needed people to come back to work and no one was coming back to work. What did they do? They had to raise their wages. And then when they raised their wages to compensate, they had to raise the price of everything that they're selling to compensate for the rise in wages. And then all of a sudden, here we are in 2025, and we dealt with years of massive inflation that hasn't went away yet completely. And yeah, again, here we are. So that's what it means. I mean, I know that was a long spiel, but that's what expansion means. The government needs to be able to create money out of thin air, making the money that you and me have way less valuable. Now, the last thing I want to look at is this article right here. And it says, could the government sell gold to pay down the debt? Now, we're not going to read the whole thing. Right here, though, it says, first, dumping U.S. gold onto the market, though, could trigger a price collapse, significantly reducing its value before much debt relief could be achieved. And what that means is, like, think about it. You have a CEO of a company that owns like 60% of the company's stock. The stock is valued at, $500 billion, whatever. If that CEO were to, even if he could legally take and sell every ounce of that stock, or not ounce, but every share of that stock immediately, he would not be able to sell it all at the current price. The value of it would go down as people buy up the shares because you'd run out of people willing to buy the shares at so-and-so price. And then you have another person that's buying it a little bit lower. And that's how stocks go down. People sell off a lot of it. You don't have as many people buying because so much of it is being flooded into the market, which is kind of like what we just talked about with the dollar. But I do want to get into this point. It says, second, even if gold was sold at today's market price of $2,900 per ounce, it would generate around $758 billion. So even if they could get, we just talked about also, even if they could get $2,900 an ounce for every single ounce that they had, this large sum just represents 2%, we talked about this, of the $36.5 trillion national debt, and it wouldn't be a sustainable solution. And then this is the important part. It says, this is the article or the paragraph I really, really wanted to read to you. It says, lastly, gold is seen as a strategic reserve. Listen to this. Gold is seen as a strategic reserve. The U.S. government holds it as a hedge against economic crises rather than an asset to be liquidated. Other nations that have sold off gold reserves, such as the UK in the late 90s, later regretted the decision when gold prices surged. Bam! That's literally what we talk about on this channel all the time and have been for years. Guys, whenever I put gold and silver into my deep stack, and what I mean by deep stack, if just in case you're wondering, is that I have a light stack of silver is what I call it. A light stack of silver, which I actually do use for barter. I buy and sell as a way to make more money. But when gold and silver hits my deep stack, it stays there. That money, or that gold, I should say, and silver, which is money because it's real money, once that gets there, it doesn't go anywhere. It's there in case of economic crises, whether it's local or regional or global, doesn't matter. That's what it's there for. Or maybe it's something, me personally, like I get sick and it goes beyond my cash reserves and it goes beyond my stocks that I would sell before I'd sell my gold and silver. That's what it's there for. And I did say stocks because I do buy and sell stocks as well here and there. I mostly buy and hold. 99% of what I buy stock-wise is bought for long hold. I've talked about it before. But, I might buy something and then if it spikes, I might sell it and put it into something else. But my point is that once gold and silver hit that deep stack, it's not going anywhere. And I hope that I die with it. I hope that I never need it. I don't plan on selling it to go on vacation. I don't plan on selling it to buy a new car. I don't plan on selling it to move. It's there. And I hope that I never need it. And I hope that when I die, it goes to my kids and then they can make their decision based on their current situation or their beliefs or whatever it may be. That's why it's there. But I do want to say one more thing before we go. If the gold is there, and even if we revalue it to the current spot price, I don't think it's going to make much of a difference at all. Alternatively, and I've said this in another video, if that gold is not there, it is going to cause a lack of faith in our U.S. economic system. It's going to cause the price of gold to skyrocket in two ways, not one, but two. One, I believe, a personal opinion, not financial advice, this is just what I think. I believe that not only will we see gold price skyrocket in trading for gold and silver, in other words, it just goes up naturally because people are like, man, we thought there was more gold than there is in the world right now. You know what I mean? But additionally, I think gold also goes up because of the collapse of our dollar. I think people losing faith in the US economy is not going to be a good thing for the dollar. And I think you will see increased inflation. And I'm not going to say as far as hyperinflation, but definitely accelerated. Definitely more accelerated than it is now, even if that gold's not there. Because even though our dollar is not backed by gold, people still look at that gold as one of US's strength because we have all this wealth, we have all this gold, we have all this military, we have all this, we have this and this and this. And if they find out that that gold's not there, what else are we lying about? So I think we lose faith in the US economy, which causes the dollar to collapse. So gold goes up naturally. Like I said, if the dollar's worth $1 today and gold's worth 2,000, tomorrow the dollar's worth 50 cents, gold's worth 4,000, even though it's not really worth more in trade for goods and services, right? But I think you'll also see gold just go up because there's not as much out there. So that's my opinion, guys. Let me know what you think, though. I would love to know your thoughts. Leave a comment down below. I probably won't respond to it. I don't respond to most of the comments anymore because I get so many. But I do read a lot of them. Not all of them, but I do read a lot. And hopefully I get to see yours down there and I get your thoughts. So thank you so much, guys. Thank you for watching. Do me a favor. Don't forget to like and subscribe before you go. And we'll see you in the very next video.